Have you ever believed that achieving financial freedom means simply amassing a pile of cash? This myth runs deep in popular culture, leading many to chase after money instead of seeking true wealth. It's time to challenge this notion and uncover the truth about what financial freedom really means. Before we continue, make sure to subscribe to our channel and hit the notification bell so you don't miss our upcoming content that can transform your financial mindset. Now let's continue. Many people equate financial freedom with a hefty bank balance, thinking it's all about the numbers. But here's the catch. Financial freedom is about having choices. It's about peace of mind and the ability to pursue what you love without being shackled by money concerns. This misunderstanding persists largely because it's depicted in movies, commercials, and even in our own conversations. When we glorify the rich lifestyle, we forget about the real freedom that comes from knowledge and smart financial habits. To break free from these myths, we must shift our perspective. True financial freedom starts with understanding the principles of wealth, not just the pursuit of dollars. It's about education, mindset, and making informed decisions. Ask yourself, what would you do with your time if money were not a concern? Recognizing financial freedom as a mindset shifts your focus from merely accumulating wealth to creating a life of purpose and fulfillment. It's time to embrace this truth and redefine what financial independence means for you. Warren Buffett's investment philosophy serves as a powerful counter-narrative to conventional beliefs about wealth. One of his key insights is the importance of value investing, buying quality companies at reasonable prices rather than chasing trends or fads. This approach challenges the notion that quick riches and speculative trading are the only paths to wealth. Instead, Buffett emphasizes patience, discipline, and a deep understanding of the businesses in which you invest. Buffett also highlights the significance of long-term thinking. Rather than focusing on short-term gains, he advocates for holding investments for the long haul. This mindset contradicts the common belief that one must constantly buy and sell to be successful. By committing to a company and allowing it to grow over time, investors can enjoy more substantial returns. Buffett teaches us that wealth isn't about timing the market, but about time in the market. Another crucial lesson from Buffett is the power of emotional intelligence in investing. He warns against letting fear and greed dictate financial decisions. Most investors react impulsively during market fluctuations, but Buffett encourages a calm, rational approach. Understanding your emotions and sticking to your investment principles are essential for financial success. His insights remind us that true wealth comes from knowledge, patience, and the courage to make informed decisions rather than following the crowd. A wealth mindset is fundamental for achieving true financial independence, extending far beyond mere monetary gains. It embodies a belief in abundance over scarcity, instilling the notion that opportunities are plentiful for those who seek them. By adopting this perspective, individuals shift their focus from what they lack to what is possible, fostering a sense of empowerment that drives them toward their financial goals. This mindset encourages proactive learning and growth, as individuals become more willing to invest in themselves through education and skills development. Those with a wealth mindset are not afraid of failure. Instead, they view setbacks as learning experiences that contribute to their journey. They understand that wealth is a byproduct of continuous effort and the courage to innovate, rather than just the result of high income or luck. Moreover, cultivating a wealth mindset involves surrounding oneself with like-minded individuals who inspire and uplift. It is about building a supportive network that fosters collaboration and shared learning, essential elements in the pursuit of financial freedom. By prioritizing growth, gratitude, and resilience, anyone can develop a mindset that not only drives financial success, but also enhances overall life satisfaction, redefining what true wealth really means. Investing and speculating are fundamentally different approaches to handling money, each with its implications for wealth creation. Investing is rooted in thorough analysis and long-term value, focusing on assets that are expected to appreciate over time due to their intrinsic worth. In contrast, speculating is akin to gambling. It often involves short-term decisions based on market trends, emotional reactions, and unpredictable price movements, which can lead to significant risks and losses. Warren Buffett is a staunch advocate for a long-term investment philosophy, emphasizing that true investing requires patience and a deep understanding of the companies in which one is putting their money. Rather than jumping on the latest stock craze or market hype, Buffett teaches the importance of conducting comprehensive research, evaluating a company's fundamentals, and recognizing its long-term potential. This disciplined approach allows for growth as the investment matures, rather than succumbing to the volatility typical of speculative endeavors. The long-term perspective advocated by Buffett is not just about seeking immediate profits. It's about building sustainable wealth. By committing to quality investments and being willing to weather market fluctuations, investors can reap the rewards over time, which contrasts sharply with the anxiety that often accompanies speculative trades. Fostering a mindset focused on enduring value rather than quick returns is key to achieving lasting financial success, encouraging individuals to think strategically and patiently as they build their portfolios. Building wealth over time requires patience and consistent effort, principles that Warren Buffett exemplifies in his investment journey. Wealth accumulation is not an overnight phenomenon. It is a gradual process grounded in making sound decisions and allowing those decisions to manifest over years. Buffett's success story is a testament to the power of taking a long-term view, where he often shares how his most significant gains came not from quick trades but from investments he held for decades. Patience is paramount in wealth building, as it allows investments to appreciate and compound. Buffett refers to this concept as the snowball effect. When one reinvests earnings and maintains a steady hand during market fluctuations, wealth begins to grow exponentially over time. This is so deeply embedded in Buffett's philosophy that he encourages investors to think about the future returns rather than getting distracted by short-term market noise or immediate results. Additionally, consistent effort plays a vital role in achieving financial success. This can manifest as ongoing education, regularly evaluating and adjusting one's investment strategy, and committing to a disciplined saving habit. Buffett's own journey exemplifies that wealth is not merely a result of income, but of strategic actions taken over time. By fostering consistency and resilience, individuals can create a solid foundation for long-term wealth, reiterating the profound impact of these attributes in the pursuit of financial independence. Financial education is a critical component in making informed decisions and avoiding costly pitfalls on the pathway to wealth. Knowledge empowers individuals to navigate complex financial landscapes, understand investment options, and discern between productive opportunities and high-risk gambles. Without a solid foundation in financial principles, many may fall prey to misleading schemes or make decisions based solely on emotion rather than information, which can impede their financial growth. Warren Buffett champions the importance of continuous learning in finance, often stating that investing in yourself is the best investment you can make. Reading books, attending seminars, and engaging with financial mentors are ways to enhance financial literacy. With a deeper understanding of markets and investment strategies, individuals become more capable of assessing various financial opportunities and making astute choices that align with their long-term goals. Moreover, financial education fosters confidence and independence. When individuals are equipped with knowledge, they can approach money management without fear and make empowered decisions. This self-reliance not only enhances one's financial prospects but also reduces anxiety associated with money matters. By committing to lifelong learning and refining financial skills, individuals can create sustainable wealth while avoiding common pitfalls, underscoring that education is a cornerstone of financial success. Diversification is a vital strategy for managing risk in investing, and Warren Buffett emphasizes its significance in building a robust portfolio. Rather than putting all your eggs in one basket, spreading investments across various assets can protect against significant losses. Buffett advocates for careful selection of diverse investments that align with your understanding and philosophy, ensuring that you are not overly exposed to any single market sector or economic condition. While Buffett recognizes the importance of diversification, he also warns against over-diversification, which can dilute potential returns and make managing investments more cumbersome. He famously remarked that owning too many stocks can lead to a lack of focus. Instead, the goal should be to hold a well-researched, varied portfolio that leverages different industries and asset classes without losing the essence of thorough understanding and management of those investments. Ultimately, Buffett's lessons on diversification teach us that balancing risk while maximizing potential returns is an art. Effective diversification doesn't mean randomly selecting a wide array of investments. It involves strategic choices rooted in knowledge and analysis. By thoughtfully diversifying, investors can safeguard their portfolios against volatility while setting themselves up for long-term growth, showcasing that smart investing is about quality and insight rather than quantity. Emotional biases can significantly cloud judgment, often leading investors to make poor financial choices. Warren Buffett has long recognized that emotions such as fear and greed can derail even the most rational decision-making processes. Investors who act impulsively based on their feelings, whether it's panic selling during a market downturn or exuberantly buying during a rally, tend to suffer the consequences of their hasty actions, often resulting in losses. Buffett emphasizes the importance of maintaining a disciplined approach amidst market fluctuations. He advises investors to cultivate a mindset that is focused on long-term goals rather than fleeting emotional reactions. By developing the ability to remain calm and composed, investors can make sound decisions that align with their investment strategies rather than reacting to market noise. This perspective is vital, as successful investing requires a cool head, especially in volatile times. Ultimately, avoiding emotional decisions hinges on education and preparation. When investors are knowledgeable about their investments and have a clear plan, they are less likely to succumb to emotional impulses. Buffett encourages individuals to embrace patience and to maintain their investment philosophy even when the market presents short-term challenges. By minimizing emotional interference, investors not only protect their capital, but also enhance their chances of achieving lasting financial success. Investing in sustainable businesses has become increasingly vital as the world recognizes the importance of environmental, social, and governance (ESG) factors in long-term value creation. Warren Buffett has long underscored the significance of choosing investments that not only perform financially, but also contribute positively to society and the environment. This approach aligns with his belief that companies with ethical practices and sustainable models are likely to deliver continuing returns over the long haul. Buffett's focus on sustainability reflects a deeper understanding of market trends and consumer preferences shifting toward responsible investing. Companies that prioritize sustainability are better positioned to navigate regulatory changes, mitigate risks related to climate change, and maintain a loyal customer base. Furthermore, these businesses often innovate and adapt more readily, which can lead to sustained growth and profitability, aligning perfectly with Buffett's long-term investment strategy. Ultimately, the importance of sustainability in investing transcends financial metrics. It speaks to the vision of building a better future. By placing value on sustainability, investors can foster economic systems that prioritize people and the planet alongside profits. Buffett's commitment to investing in companies that embody these principles illustrates a broader understanding that true wealth encompasses both financial success and responsible stewardship of resources, embracing the idea that prosperity should benefit all. The power of compound interest is a fundamental principle that can exponentially grow wealth over time, and it is a concept that Warren Buffett staunchly advocates. Compound interest occurs when the interest earned on an investment is reinvested, allowing the investment to grow not just on the initial principal, but also on the accumulated interest. This interest-on-interest effect amplifies the growth of wealth, especially when given sufficient time to mature, making it one of the most potent tools in any investor's arsenal. Buffett often illustrates this principle with the story of the snowball, starting small but gaining momentum as it rolls down the hill. The earlier one starts investing, the more time compound interest has to work its magic. For example, investing a modest amount consistently over several decades can lead to substantial wealth, far surpassing those who start later, even if they invest larger sums. This demonstrates how patience combined with regular investment can significantly enhance financial outcomes. Moreover, the magic of compound interest reinforces the importance of disciplined saving and investing habits. It encourages individuals to be proactive in their financial journeys, understanding that every small contribution can yield significant returns over time. By recognizing the long-term implications of compound interest, investors can appreciate the value of early and consistent contributions to their portfolios, ultimately realizing that the true measure of wealth creation lies in nurturing their investments through this powerful principle. Real financial freedom should be defined not merely as the accumulation of wealth, but as a state of mind supported by effective financial habits. It encompasses the ability to make choices that align with one's values and passions without being hindered by financial constraints. This holistic view shifts the focus from chasing monetary milestones to fostering a mindset that embraces financial independence, empowerment, and controls over one's financial destiny. Understanding financial freedom in this way emphasizes the importance of developing strong financial habits. Budgeting, saving, investing wisely, and dedicating time to financial education are essential components that can lead to a fulfilling and secure life. By prioritizing effective financial practices and cultivating a responsible relationship with money, individuals can build a solid foundation for true freedom, allowing them to live life on their own terms, regardless of their net worth. Ultimately, this redefined view of financial freedom suggests that true wealth is found in the ability to live authentically and purposefully. As Warren Buffett illustrates through his own life, it's not just about how much money one has, but how that money can be used to enhance one's quality of life and contribute positively to the world. By embracing this paradigm, individuals can inspire themselves and others, understanding that financial freedom is as much about mindset and habits as it is about balance sheets. Final thoughts on wealth draw upon the timeless philosophies of Warren Buffett, underscoring that true financial well-being stems from informed long-term decisions. Buffett's approach encourages individuals to focus not merely on quick gains, but on building a sustainable investment strategy grounded in knowledge, patience, and discipline. This perspective highlights that wealth accumulation is not an event, but a journey that requires consistent effort and an understanding of the underlying principles of investing. Buffett's teachings remind us of the importance of cultivating a wealth mindset, a mindset that values education, ethical investments, and emotional control. By fostering these attributes, individuals can navigate the complexities of financial markets and make informed choices that honor their personal values and long-term goals. The focus should always be on understanding the impact of each financial decision, enabling individuals to work towards true financial independence. In conclusion, embracing Buffett's philosophies provides a roadmap towards lasting financial success. By prioritizing informed decision-making, the power of compounding, and the cultivation of effective habits, anyone can forge a path to real wealth. Ultimately, true financial well-being is about living life on one's own terms, guided by principles that promote growth, responsibility, and sustainability, ensuring that prosperity not only enriches the individual, but also contributes to the broader community.